here we are, finally in the studio. We're not all set up yet, but I wanted to definitely get out of that closet. I mean, literally, we were in the closet. Finally got out of the closet, and now here we are in the new studio. And you can see Andy over there. We can see the palm trees blowing in the wind, not because it's sunshiny, but because it's raining. We're flooding. I literally had to come over here. Romeo and I had to come over here in a boat this morning. Andy, you floated in over here.
I'm telling you, the roads in LA they really don't handle rain well at all. They're crumbly. They fall apart. Big little pockets of little floods, and the city is just so poorly designed to handle rain. I guess because it doesn't rain very much, and when it does, it's just like everybody falls apart. Nobody.
Well, hell, look at the damn streets in Los Angeles. Everything's falling apart here. What are the homeless people? I mean, like,
I know it's gotta be
windy out there.
It's gotta be rough. You better hope your tent is. You got a drawstring on your tent. You can shut it down, I guess.
Have you ever been to Brazil? In Brazil, man, they live in boxes. They have like cardboard boxes, and I've seen it.
And the favelas.
Yeah, the prisons. No roof on the prisons. It just when it rains, and it rains over there. It pours. You know, here, what was it? One of my clients this morning was telling me. He said, you know, it never rains in Southern California, but it pours.
That's the old song.
It pours in Southern California. Hey, Andy, I want to talk about the drama because, you know, you see this shit over in like the UK, Australia, over in Asia, where these, what do you call it, politicians, they all like beat up on each other. They're like punching them out or throwing chairs. And hell, we're seeing it in art. I mean, come on. Yesterday, this woman was up and what we're talking about, by the way, I got woke up this morning by one of my best friends, my best friend in Germany, and he's like, here's what he's saying. So here the world is literally watching us, and here's what my friend said, and I'm like, yep, you're absolutely right. I want to share this with you. So he says to me, I get this notice in the morning. He says, I can't believe the chaos about finding the speaker, McCarthy, trying again and again. And he's right. I mean, last night, one of the Republicans was accusing the Democrats over there of drinking. And when she said they were drinking and eating popcorn or some shit, but anyway, and drinking, and when she mentioned that, oh my God, it was too funny.
It's very chaotic, yeah.
He says to me, this is world news. We're so funny. I mean, they're laughing at us. It's like a freaking drama clown circus, Andy. Says, this is world news, something you have to bring up in your program. Well, of course, I told him, I said, of course we're going to bring it up. You want to cut in on it? Why the hell are they all bickering and fighting? I mean, we should have already, like the Democrats, where they have this groomed Hakeem Jeffries.
They have the next guy in line.
They got him all ready to go. I'm seeing him pat on his heart because the Democrats are all applauding him, and he's reaching higher numbers than Kevin McCarthy for speaker. And it's like, here we are, like, not even organized. It's like they're holding out for something.
One of the factors, I think, is that Republicans and conservatives tend to be more independent-minded than Democrats. Democrats really fall into that hive mind where everybody just gets in line and they just follow the party line, right? But conservatives, independents, and libertarians are more free-thinking, so there's going to be more disputes. So I think that's part of it. I think it's also the old power struggle, because that's what politics is really all about. Politics is about power and positions and who gets this and who gets that. And I think these 20 people saw an opening where they could flex their muscles and say, hey, maybe we could get more. Maybe we could get a better position. And I think Trump is really behind the scenes. I think Trump is going to pull it together. I think he's the only one who can, because he's the only one who really can unify the party.
You think he's the one that's actually pulling the strings on the circus?
He may have something to do with it. You know, Trump is obviously the most important conservative politician, and he has to know what's going on, and he has to be talking to people. I can't imagine he's not in the fray. He's just staying out of this.
Well, Punchbowl, who's been staying on top of this, has been saying that. So last night, after they discussed that they were going to adjourn till noon today, that Bobber, but then I saw her with Hannity, and she wouldn't give Hannity a minute to speak. And Hannity kept saying, excuse, and she just kept, and it's like they're holding out for something. They want better assignments, seat assignments in the committee. They want certain things to be able to be passed. And it looks like if Kevin McCarthy wants to get this over with and become the Speaker of the House, and he really wants to start going after the Bidens, and he wants to go after the IRS and all these different things that we elected them for, then he needs to cave into the other 20 Republican demand. What do you think? Is that what it is? That's what I hear.
Yeah, I mean, like it's a power struggle. These 20, they really want to make sure that we have more a strong agenda, like you said, that we have these investigations, and they don't want to see somebody. Remember, the last Republican speaker was really weak. It was Paul Ryan.
Horrible.
Yeah, he was very weak, and he didn't put any pressure, didn't do any of the things that the conservative base of the party wants. So they want to make sure that there's an agenda in there that it's not just going to be business as usual.
So you think it's Trump that's kind of like the puppeteer that's mining the circus? Is that what you think? He's the ringleader?
I don't know if he's the ringleader, but I think he's got to be involved in all of these discussions.
I'd love to hear y'all's comments out there. Comment us. Let us know what your thoughts are on who is, the ringleader or whatever is going on with this thing, because you look at it, it's exactly 20 people that are holding him back from actually becoming House Speaker. But I think today, I really do. Even Trump said something. He mentioned that he believes that today there will be an announcement that Kevin McCarthy is the Speaker of the House.
Yeah, it was really interesting because Trump's been a supporter of McCarthy. And all of a sudden yesterday he started saying really positive things about the group of 20 people. They're patriots and everything, and the irony is that those 20 are very, very strong Trump supporters.
Yeah.
And that's obviously really important. So Trump may be letting them, because he knows they're really Trump supporters.
He's pretty good. I mean, Trump knows how to manipulate.
He's a negotiator.
He is a negotiator. He's a businessman.
The Art of the Deal. That's his book. That's
the Art of the Deal.
That's what he's all about. And he's got to be.
You just gave Trump a plug. Yeah, The Art of the Deal is a great book.
It is a good book. One thing I took away from that book, I don't think I read the whole thing, but it's really helped me in any of my negotiations in life. He said, always be willing to walk away from a deal. Always be willing to walk away. And if you have that, you don't go into a deal feeling like you're needy or you're trying to get so. You always have that power to be. I can walk away at any time, and that's something that's really when I've negotiated for car leases or something like that. That's always been really powerful. That I know I can get up there and walk away, and they know that, and that's a great negotiating edge. So I think Trump he's involved in this deal, and it's ironic that these 20 are all very, very strong Trump supporters. So I can't, he's saying outwardly, I support McCarthy, but now he's saying positive things about this group. It just gives me the sense that he's trying to pull something together.
Well, Hannity, listen to this. You get a kick out of this. So Hannity was drilling Boebert. Is that how you say her name? Boebert?
I think Boebert. Yeah.
Anyway, I know. But with Boebert, she's pretty big chested. But anyway, Boebert, he said to her, so you did Jim Jordan the day before, and then you did Donald, and who's it going to be tomorrow? She's like, I don't know, it could be Trump. We may elect Trump as the House Speaker. And I'm thinking, oh my goodness.
Yeah.
You guys are something else. Hey, on the other side of things, on the financial side of things, which is what we're here about, really, but we like to share the news as well, is what the Fed came out and said yesterday. And, they definitely said that they were going to continue raising rates. And that's why the market is really struggling today again.
Yeah.
And they also, the St. Louis Fed came out quietly and said that we're now in a recession. Like, we didn't already know that. But they really just came out quietly and said that we are in a recession. I mean, your thoughts on that? Because I want to talk about why we're in a recession and why the Fed is saying that. But go ahead.
Yeah, the St. Louis Fed came out with a really interesting statistic that says 27 of the 50 states are now in negative GDP. That means their economy is negative. They're not growing. So that indicator has always come before. If it's over 26 states, that's always led to a national recession. So that's their major indicator. You got 27 states now with a negative GDP growth. So we're basically right at the start, because that's what always happens at the beginning of a recession. And you have so many other factors. I just saw Amazon laying off 28,000 people. 28,000.
Yeah, I heard that.
And you had Facebook laid off 11. There was some Tesla had layoffs. So we're seeing it. The recession is here, and I think it's 2023. It's really by middle of this year, your average person on the street will be saying, "Hey, we're in a recession." We've been talking about this
for a while,
for quite a while, that this is coming.
Yeah, and you know who Ron Paul is?
Of course.
Okay, so Ron Paul came out, and I want to share this with you because this came from our friends over at Schiff Gold. And for the last several years from Peter Schiff, they say that we've enjoyed the fruits of the economic bubble blown up by easy money and debt. And we've been talking about this now for a while. And he says, but ultimately, that debt is going to be the economy's undoing. In other words, the debt is destroying the economy. And simply put, that the debt levels are unsustainable without runaway inflation. So pick your poison. And the U.S. government now has piled up more than $31 trillion in debt and continues to run the massive deficits month after month with no end in sight to the borrowing and spending. And American consumers have now buried themselves under the trillions of dollars in consumer debt, including over $1 trillion in credit card debt. And corporations now are also levered to the hilt. In fact, the banks aren't even lending money to corporations anymore. It's hard to even get a loan right now with the bank. And the Federal Reserve has been raising the interest rates in the high debt environment, and many believe it will push the economy now to the breaking point. And as Ron Paul explained, he says, we may well be headed toward the mother of all economic crisis.
Wow. That's a very, very strong statement that you're making. Very strong statement.
I mean, I'll tell you another one. Noel Rubani, who is a former advisor to the International Monetary Fund, and he's a member of President Clinton's Council of Economic Advisors, was one of the few mainstream economists to actually predict the collapse of the housing bubble. And now Rubani is warning that the staggering amounts of debt that's held by individuals, businesses, and the government will soon lead to the mother of all economic crisis. And Rubani, Andy, properly blames that the creation of debt-based economy on the near at zero interest rates and the quantitative easing that's been going on are persuaded by the Federal Reserve and these central banks that the results of the sub-zero interest quantitative easing policies is price inflation that's wreaking havoc on the American people. And that the Fed now has been trying to eliminate price inflation with a series of interest rate increases. And that's what they think they can raise the rates up to bring this.
Yeah, that's what the plan is, right?
And then they'll pivot and go back because they got to bring the rates back down. Can't keep them up forever.
Yeah, then we'll go into depression.
Exactly. So far, these rate increases have not significantly reduced price inflation. In fact, I see things going up in price.
It hasn't worked yet. Yeah, you're right. I mean, we're still very, very high. It's tapered. It's it's come down slightly. It's tapered, but we still have the inflation, and that's why they're still dead set on raising rates. And I think there's going to be at least two more. They're talking about 5.1 as being kind of the target. What are we now? 4.2 or something? 4.25?
Are you talking about an inflation?
No, the Fed rate.
Oh yeah,
it's 4.2.
Yeah.
5. So there's going to be at least two more 50 basis point raises coming this year.
If not more, who knows?
The Fed had basically said in so many words, we prefer a recession to runaway inflation.
Well, they say it, and the reason that they say they're raising it is because we now have added more jobs as well. So they think that the things that they're doing is helping. And I got to tell you something. It's either way, it's a win. I mean, it's a lose situation. It's either way. They let the monster loose. They let it out too long, and now the monster is running rampant. And the rate increases now have negative economic effects, including the decline in the demand for new homes. And increasing interest rates make it impossible for individuals, many middle-class individuals and working-class Americans, to actually afford a monthly mortgage payment for even a relatively inexpensive home.
That's incredible. Yesterday I was looking, remember you came by my desk and I was looking at the debt clock page.
Yeah, I saw you doing it. I see that. I look at it all the time.
There's an amazing statistic there. If you go back 22 years.
Tell people how they can find the debt clock.
Yeah, it's called the U.S. debt clock, and it tracks all these great statistics.
So what do they go to, usdebtclock.com?
Yeah, U.S. debt clock, yeah.
Yeah.
And so many interesting statistics about not just the debt, the national debt, but all about the economy. And one amazing statistic, you can go ahead and look at it now. In the year 2000, the average home price, $160,000. Today, the average home price is $480,000. Okay, so that's a threefold increase, right? That's a 200% increase, threefold. Now, if you look at wages have only gone up in that time period from 31 average wage for Americans, 31,000 to 35,000.
Yeah.
Okay, now that's about a 15% increase. So look at how slowly wages have been rising in comparison to the home prices, right? And you see the effects of inflation. So somebody in the government may say, oh, wages are rising. Yeah, but they're rising at a tiny, tiny percentage of what the inflation is. And that's what's really the killer for most Americans. Your wages are not moving up in relationship to the price of housing and the price of goods and things like that. So you can see in those statistics what we've been doing, this borrowing, debt-based economy, what Ron Paul's talking about, we've been doing that for, at least 20 years. And look at the damage that's had on the average middle-class American, and you can really see why this system is not working. And we're really coming into the end of the bubble where we need a restructuring, and we need sound money. Ron Paul's always been a great advocate for sound money, for precious metals-backed money. And I think we're going to see some of that in the future. We've talked about a lot the BRICS nations using some form of gold in their basket of currency in their attempt to get off the dollar, the petrodollar. So if we see that gold again comes in to stabilize the currency, because I don't know what else could, then we're going to really see gold prices move, and having gold will just be one of the safest things you could have, best protectors of your wealth.
Exactly. Exactly. And you know what Rubani and Paul also say is that the main reason that the Fed cannot raise the rates to anywhere what they would be in a free market is the fact that it would be on the federal government's ability to manage its actual debt. And according to the Congressional Budget Office, the interest on the national debt is now already on track to consume 40% of the federal budget by 2052.
Wow.
2052. Golly, I'll be dead by then, I think.
It's coming back. I mean, here we are, it's 2023, right?
67. Man, I don't know. I may be here, I may not be here.
I feel like I got lost in the 90s. After the 90s, it's all a blur. I can't really remember what's happened.
60. Yeah, anyway, 2052, and it'll surpass the defense spending by 2029.
Oh, wow.
And a small interest rate increase can raise yearly federal debt interest rate payments by many billions of dollars, increasing the amount of the federal budget that is devoted solely to servicing the debt. Right. So the federal government's physical picture is made worse by the fact that Social Security Trust Fund will begin to run deficit by 2035, while the Medicare Trust Fund will run deficits by 2028. That's just 5 years from now.
Yeah. Wow.
The looming bankruptcy of the two major entitlement programs, combined with the unwillingness of most in Congress to reduce either welfare or warfare spending, puts the Fed actually in a bind. And it raises the rates to levels needed to really combat price inflation. And the increase in interest payments will impose hardships on individuals and businesses, as well as raise federal payments to unsustainable levels, is what they say. And this is what's going to cause a major economic crisis, including government defaults on its own debt, causing a rejection of the dollar's world reserve currency status. Also, if the Fed continues to facilitate federal deficits by monetizing the debt, the result will be an economic crisis caused by a collapse in the dollar's value and a rejection of the dollar's world reserve status. And this crisis will actually lead to social unrest and violence, as well as an increased popularity of authoritarian movements on both the left and the right. And that sounds like a civil war to me. And this will lead governments crackdowns on civil liberties and increase government control of our economy. And the only bright spot is that the crisis will also fuel interest in the ideas of liberty and could even help bring about a return to limited constitutional governments, free markets, individual liberty, and a foreign policy of peaceful trade with all. That's a lot. I mean, this sounds like not good.
Yeah. I mean, what he's saying is that these government policies of runaway debt and printing of money is going to lead to this situation where they're going to have to crack down on civil rights. They're going to be more authoritarian, tyrannical governments. But he's saying, the silver lining may be that it leads people to return to the principles he's talking about: liberty, about free markets, individual rights, which is the foundation of this country and what made this country to be a great country. And if we keep deviating from these values, the results are not going to be good. I mean, we need sound money. Is every society, we always talk about Ray Dalio, and Ray Dalio has done a great analysis of how societies fail and what are the characteristics of them towards the ending of the cycle, their cycle of decline. And the loss of sound money is always present. We always see the loss of sound money. They debase the currency. They used to put more copper in with the gold. They used to mix more copper in with the silver.
That's right.
Debase the money. So today we don't even have real currency in the sense of metals backed, but they just keep printing money, and eventually it's worth nothing, and the dollar is destroyed, and then we have this social unrest and chaos. So it's funny. It's because it's like a predictable cycle. And you're right. It doesn't sound good. But we as individuals, we can make choices to protect ourselves, protect our families and communities, and make the right choices so that we're not a victim of this, but we can be people that can bring strength and light into the new direction.
Yeah, no, absolutely. And that's why, give us a call, 800-753-8534 or 323-380-5485. Andy, you want to give me, your phone number by heart?
Yeah, you can reach me at 213-732-2865. That's my direct line. You can text me there. I'll be happy to help you with any questions about gold and silver investing and get you on the right track. And I got to tell you, we work with clients who are first-time buyers of gold and silver, right? And we're happy to work with you and get you familiar with the process. It's a lot easier than you think to take possession of gold and silver, and we make it easy for you. We're very accessible. We're a relatively small company, so you can talk with people. You can talk to us about the economy and about your finances. And we have people who are very knowledgeable. And once you start to own gold and silver, it's something that it's great. I know since I started buying gold and silver, it gives you that sense of security, of having, you have an asset that, with all the government's shenanigans and all of their trickery and all their deceit, you have something that's outside the matrix, outside that system.
Put your mic up further. They're saying you sound far away.
Oh, okay. Sorry about that.
Pull it closer to your mic. There you go. You go. Like that. Kind of like talk into it. You sound like you're far away.
The fact is that when you have gold and silver, like I'm saying, you have that protection. You have something that's outside the system. And if the government employs the central bank digital currency, which is on the way, it's already being pushed and being developed.
Right there you go.
Okay, that's better. Okay.
Kind of like bring it into your mouth a little.
Okay.
There you go.
So
there you go.
You have that security of knowing that you have gold and silver, you have an asset that people will trade with, like what happened in Venezuela during their period of hyperinflation. People used silver to buy groceries. Now imagine that. You have some groceries. Their currency is toilet paper, right? It's absolutely worthless, which is going to be the dollar eventually. You have something, you take it, people say, here's some milk, here's some food, here's some wood, right? You can get real assets. So it's about real tangible assets.
Now you're talking about bartering.
I know, but that's the thing. When you have a real asset, it's something that...
Well, you can always exchange it for more value later on as well, because
of course,
as we see gold prices go up, in fact, it was the number one. Everything else went down for 2022.
Best performing asset of all the major asset classes of 2022.
Let me stop for a minute. The other day there was a lot of news because the FDIC, the SRAC committee for the FDIC, who is the insurance corporation that actually insures your money when you put it into a financial institution, and they're supposed to give you insurance up to $250,000. Well, we know that they don't have that kind of money in reserves if there was a bank run. So the FDIC literally held a meeting with the SRAC committee, and they were talking about putting mechanisms in place for bank runs when the market ends up going upside down and crashing. Well, besides the breaking or the big news, the headlines on what's going on with the clowns in D.C., both on the right and the left, there's big news about 2023 spelling big trouble for the U.S. economy, and there's a majority of large banks now that are warning. So I want to share some of this with us and then get your thoughts on this as well, that the vast majority of economists at 23 of the largest financial institutions surveyed by the Wall Street Journal predict that the United States will fall into the grips of a recession in 2023. Yet we had the Fed yesterday, St. Louis Fed, say that we're already in a recession.
And
the news goes on and says that millions of Americans will lose their job. So I want to share some of this with you, and they're saying that more than 2/3 of nearly 24 institutions, which include trading firms and investment banks that do business directly with the Federal Reserve, expect the U.S. economy to contract in 2023, according to this report. And 2 of the 23 firms expect that the recession is to come later in 2024. Well, we talked about that the other day. So 2 out of all of them. So while 5
21 said 2023 is going to be the year.
Right.
Yeah.
While 5 actually state, let me get my numbers here right. Yeah. So while 5 of them actually believe that the United States will manage to avoid a downturn altogether. And that's Credit Suisse, who's in a ton of trouble, right? Goldman Sachs, HSBC, JP Morgan Chase, and Morgan Stanley. And need I say that these guys are always in trouble. And one day, I'm going to share with you that will literally shake you to the core the criminal acts behind these banks. I will share it with you. So these institutions that predict a coming recession expect consumer spending to weaken as Americans deplete their savings. And I wonder why they're talking about putting mechanisms in place. And an aggressive Fed drives up borrowing costs, and as banks' lending standards get tighter. So soaring inflation, which in June 2022 hit a record peak, a recent peak of 9% in annual terms, that's measured by the Consumer Price Index, CPI, has forced the Fed now to raise rates at its fastest pace since the 1980s. And this is in a desperate bid to relieve price pressures. Well, this aggressive rate increase has so far only had a limited effect on the November CPI, showing inflation running at 7.1%. And an alternative measure of inflation that uses the same methodology as the U.S. government used to measure the CPI in the 1980s puts November's inflation figure at a much higher 15.23%. So even though inflation has somewhat eased from its June peak, it's far from enough for the Fed to hit the brakes on the interest rates, which were brought up quickly from near zero in March of 2020 to the current range of 4.24 to 4.5%. So in their most recent summary of economic projections, the Fed officials said that they expect that the terminal Fed fund rate, meaning the highest level before it hits a ceiling and later falls, is to come in at 5.1%. Unemployment rate, that high would mean now that several million Americans are going to be losing their jobs. So most of these economists that were surveyed by the Wall Street Journal think that unemployment will get worse and peak at more than 5%. These are big numbers.
Yep.
And so the question here and the answer is the worst is yet to come. And prior to 2020, inflation was seen as an all but tame, but after COVID-19 hit, as the government and the the feds flooded, locked down businesses and households with trillions of dollars in stimulus and support, now the era of low inflation ground is come to a halt. It's at a halt. While the money helped businesses keep workers on payrolls and it bolstered consumer spending, it also led to an inflationary jump in demand as supply chains that were crippled by these pandemic restrictions couldn't even keep up. And what they did was they idled factories, were unable to even ratchet up their production fast enough to meet the jump in demand, and an inflationary dynamic made worse by labor shortages, with more people who were close to retirement actually left the workforce permanently. So if they were close to their retirement, they just left. And amid the pandemic and the generous stimulus checks that kept others from seeking employment, and you got to remember, a lot of that money was even bogus money. A lot of people filed for these PPPs and I'll bet that there was hundreds, I don't know how many hundreds of billions of dollars was lost to fraudsters.
Yeah, there's a lot of fraud.
Because they had no hand on it, no handle on it whatsoever.
Yeah.
I know, I've heard people that said that they had X amount of employees. They didn't have those amount of employees.
Yeah, there's a lot of fraud there.
We never took one PPP at all.
Good.
Not one. But these guys, and what they did is they just stole money from the government altogether is what they did. But so, as far as like what we're seeing, this is why there's also news out there that came out yesterday by Fox, and not just Fox, Market Watch, Money, all of them, that silver and gold are poised to shine in the year of 2023. And it's no reason that it wouldn't. And in an interview with Fox Business, David Russell, the vice president of market intelligence at the trade station, said that gold and silver are go-to assets when traders are bearish on stocks and the economies, and that the commodities are also classic hedges against the kind of inflation that we've seen in the last year. And he continued, right now, precious metals have a certain appeal because a lot of investors think that stocks are overvalued, and they view gold and silver as an alternate class. So both metals also benefit from a recession, and the Fed halting interest rate hikes is what he said. So they will bring light in 2023. And this is what I've been saying. When everything else goes bad, like the pigs in the parlor, when things go bad, precious metals seem to go up because they correlated different. They're all a different asset of their own. So on Tuesday, COMEX, silver for January delivered gains of 0.83% to $24 an ounce. It was 24 and some change per troy ounce. And gold rose actually 1.10% to $1,839.70 per ounce. So, the one thing that people ask me all the time about gold and silver, and I'm like, look, silver has a lot of industrial purposes. There's a lot of reasons why you want to buy silver, not to get rich quick, but for a reason so that you have something to fall back on too. And with everything that is going on right now, there's so many more industrial purposes for silver than there is gold. And let me share something else with you. A inflationary, what are they saying? Okay. I got to get going. I have a big client that just texted me I've got to get on the phone with. Anyway, listen, I'm going to cut it off. Andy, you want to say anything?
Yeah, all the factors are really pointing towards a great year, a great 2023 for precious metals, for gold and silver. And you want that part of your portfolio. You want to be in some tangible assets. Of course, you don't want to put everything you have into gold and silver, but you want to find a good number that's substantial enough for you that you'll have this asset, and this asset's never going to leave you. You're going to have it with you. Pass it down to your children, to your grandchildren. If you go back, I'll just say real quickly, to 1971, gold was at $35 an ounce.
Yeah.
Okay. And today, I mean, it hit a high last year. I think it was 20,060. We're around 1850 right now. So gold's going to hold its value. You're going to see the decline of the dollar only begin to worsen, and we're getting into the later stages of that whole process. So get yourself some gold and silver, get yourself some security. You'll have that tangible asset that will allow you to sleep at night.
And let me just, before I hang up and get off the air here, as an inflationary pressures continued with the U.S. Federal Reserve adding additional rate hikes and stocks tanked on Wall Street, both gold and silver actually found breathing room in 2022, rising 3.46% and 6.52% respectively. And in comparison to the Dow Jones, that lost 8.8%. The S&P 500 dropped 19.4%, and the tech-heavy NASDAQ composite shedded 33.1%. Over the last quarter of the year, silver actually ballooned roughly 17.61%, while gold went up around 9.15%. So respectively, what I'm talking about here is it's not a get-rich-quick scheme, by no means. But what it is it's a way to hedge against other things as they go down. I got guys calling me all the time, crying, and believe me, I get it. I understand it. That's why you need to get out. I have one calling me right now. I lost $130,000 in my 401k. And he's like, I want to hold the gold. I'm like, look, you can hold the gold. There's ways you can do it. But he's like, I want to just take all the money out. But he's only got like 70,000 left after he lost 130. And he wants to hold the gold. I'm like, look, the reason you get into these IRAs, these self-directed IRAs, is it's a way for you to keep your money tax deferred so you're not taxed on that money. Nobody's going to come in and steal your gold from you. It goes into a depository that is not government ran, that is insured by Lloyd's of London for up to $1 billion. You can take it anytime you want, but the rules and regulations of the IRS is that the IRA custodian hold the assets on behalf of the IRA owner because it is a taxable event. Now, if you pay cash, that's a different story. But when you're talking about an IRA, it's way different. When you're talking about an IRA, you have to report your taxes. We have a complete guide, an investment guide, a package that we can send out to you via email, or we can send it to you by mail. You just have to give us a call, and we'll be happy to get that out to you or explain it to you. But don't take much longer. We're in the year of 2023. It's like the Wizard of Oz. The tornado is coming. The tsunami looks like it's coming here in LA. The weather, it's happening. The bubbles are bursting. So don't be like that guy out there that's crying, and I'm calling on you out there, that's saying, I lost $130,000. And even if he took his money, like I told him, I said, do not take your money out. You're going to get hit another 28% on that $70,000 just on your taxes. Well, I think I'll stay and I'll wait till, it goes back up. I'm like, you're just going to keep getting hit. It's like digging a hole. You dig that hole and you keep digging that hole, and pretty soon that hole just keeps getting bigger and bigger, and you can't get yourself out, and then you lose. Now, I'm not saying everybody loses. I'm not saying that. Diversify. Diversify your holdings. Put something away that you can exchange for more value later on. And while everything else goes down in the hole, you're fine because you're sitting in something that's shining like gold and silver. Take care. I'll see you tomorrow. Andy, you want to say anything before we leave?
No, that was you wrapped it up really well.
Romeo says he's ready to go. Look here. Oh, you can really see Ro now. Come here, Ro.
Hey, there he is.
See the boy.
We're going to have a Romeo camera in the future. You can watch. If you get tired of what we're